what is your base case here, Jonathan, that Nike's best gains are behind it?
Yeah, so our call today to downgrade Nike is really not a negative expression of the company's prospects here. And really, if you look, the stock was actually one of our better performing top ideas in 2018. And we have had an outperform rating on the stock for the last 4 years. And I would say today the prospects from a product and digital perspective perhaps are as strong as we've ever seen. Now that said, there always is an appropriate price to pay for any stock, and we think, given our sector view, that current group valuations could come under further pressure in 2019. We think that the 70% current premium from a price to earnings perspective that Nike trades versus the market could come under pressure, and hence we are stepping to the sideline.
Where else, though, in your coverage universe can you see growth like Nike has seen globally? No apparent impact from the trade war from China, according to the last statement. Innovation, technology, direct to consumer. I mean, these are all the other reasons all your fellow analysts love this stock and this company. Where else are you finding that?
Yeah, you make a very good point. The growth prospects are strong, and we've seen the results accelerate, driven by product innovation and a lot of the digital initiatives where we think Nike has carved out a leadership position. So a lot of those aspects we wouldn't dispute. I would say, however, the market appears to be pricing in a lot of those positives in our view. And if you look at going back to the current valuation for the stock versus the market is near all-time peaks, while short interest is near all-time lows. And we think with a company where more than half of revenue comes globally, given the low degree of visibility to the macro environment globally, we think there is some risk that you could see that relative multiple contract with any hiccups, despite many positives from the company standpoint.
Given that 55% of earnings coming internationally, Jonathan, how important is the US dollar to Nike's prospects in the year ahead? It has, of course, started to weaken in recent weeks.
Yeah, that's always an important factor to watch in terms of currency and cost pressures. Nike has perhaps one of the more complex currency hedging platforms across our portfolio. So in terms of the next 6 to 12 months, we would expect to have very little impact on the bottom line in terms of any movements from the dollar. But on a longer term basis, certainly a weaker dollar could help the earnings prospects. It's not something we're taking an explicit view on today with our move, but it's certainly something to watch.
Finally, Jonathan, give us a name. Where's a better value?
Yeah, as part of our move today, we also simultaneously upgraded Foot Locker, which goes a little bit hand in hand with our Nike call. And if you look at Foot Locker, we think it's an excellent way to play the product cycle strength that you see at Nike at a much more attractive relative valuation. So we see the fundamentals accelerating for Foot Locker, in large part due to Nike's product cycle that we see, and that could support upward earnings revisions and we think a good return for the stock. So Foot Locker.